Hey there, sharks. Welcome back. In this video, I want to cover about trading options during earnings. Earnings is could be a bit tricky, and if you don't have enough experience and understanding how volatile earnings can be, you could get yourself in some trouble, especially if you are fairly new to options. So as you can see on my screen, there's an example. BE. This stock, I'm eyeing it and looking at it to hit my zones for me to start building a position around it. But if you look at the recent, well, if you look at today, today is Thursday, January 22nd. The stock has been hitting all-time highs. If you look at year to date, the stock is doing very well, up 54%. They're in the energy sector, and the reason why it's doing well is because the data center demand in the future is going to be, if there's more demand than supply, and Bloom Energy is a company that can help provide a solution to that. Now, they have earnings coming up in February. I believe it's February 6th. Let me just double check real quick. Their earnings will be, let's see, February 5th. So February 5th, Bloom Energy will have their earnings. I'm expecting very good earnings and sharing a lot of positive forward guidance for 2026. So either way, stock has been hitting all-time high, and you can see that since if earnings is coming up, investors are now being more cautious and taking profits. Okay, and I don't blame them. That's very wise because when it comes to earnings, a stock company can have very positive earnings, good revenue, positive forward guidance. Uh, Everything is all the numbers are hitting on the top line, and the stock will still have a sell-off. So it's very strange, and it's almost like a gamble. And premiums are at its highest during earnings, right? Volatility is at its highest during earnings. So generally, a stock, if you're planning to trade it during earnings, you'll see exceptional premium, and because of the volatility. Now, keep in mind that doesn't mean okay, time to go crazy, time to load the boat. Just understand that earnings can go any direction, and you have to be willing to uh, make your play. And if it goes against you, you have to also look at the scenarios. What is the worst case scenario? What is the worst case that can happen, right? So selecting your strike prices is you have to be very strategic when it comes to selecting your strike prices if you're looking to sell a option or buy an option. All right, either or is fine. So always keep in mind that earnings is a very important time, and a lot of people like to gamble in a way and trade during earnings. They look for stocks that have specific earnings and then make play a certain way. And and again, those that do that, they probably have more experience and they have a better track record. But for those of you that are still fairly new to the market, I don't generally don't recommend trading during earnings because you could hit all the top line numbers, everything is great, and the stock will still have a sell off. And the reverse of that, right? You could have bad forward guidance, not hitting the numbers as far as revenue and profitability and the guidance looking forward. The stock can also have an increase in value. It's very strange. So this is really there's no logic to it. Okay, I mean if you look at Nvidia too, Nvidia has been beating earnings every single time, every single round, and there has been ups and downs during earnings. So just keep that in mind. In this case, Bloom Energy, people is just this is clearly profit taking. Okay, but overall, I can expect this company to have very good earnings. But just be careful with how you play earnings, not just for this company, but for any stock out there when it comes to trading earnings. Okay, yeah. And if you like more help around this, you want to understand how to read the numbers, right, and understand options, how to generate income monthly, at least 3 to 10% per month, and start building your wealth, having your money work for you. I can work with you. I can share with you how to look at fundamentals, how to read the technicals, how to understand the strategies. If you are new to the market, the first strategy we will work on is the wheel strategy, which is the safest strategy, uh, and then and then we can move on to any more advanced strategies. And also I'll share with you how to read contracts. What does all these numbers mean, right? So if you see on my screen, I have here a long call. No, this is a cover call at 60 strike. Market value is here. This does not mean this is the unrealized left, right? So this means that as we get closer to expiration date, this number will deteriorate. But this is a cover call. So there's many ways to, how to, and also I'll show you how to read all these contracts. What does all these numbers mean? Everything, right? So this is an example of a cover call. We can look at a leap. Here's a leap. So how do you look at a leap? You can see this leap here. I'm up 2,200. There's the market value, right? So there's a difference between selling a call and buying a call. Selling, you'll see the market value shows a minus sign. Buying call, you'll see there's no minus sign here. Okay. So this is a leap, and I'll show you how to look at all these numbers. What does all these numbers mean? Line by line, everything. Right? Teach you everything I know. Yeah. Other than that, if you found this video helpful, like and subscribe. Leave a comment. You can book a time. You'll personally speak with me. There's a link in the comment section and description section. I'll give you a quick tour of my group. You can see here. This is the group. This is where we share information around the news and the market and help each other out. Uh, and then, yeah, and I provide one-on-one coaching. I literally help you. I trade with you too. I'll literally trade with you and help you make money. All right. So yeah, stay tuned for the second half of this video. You'll see me in action coaching one of my members. And then other than that, I will see you all in the next one. Yeah,
So I'm
I mean, the way
stoked.
I look at it, I think what it's supposed to look like what it did before, it was supposed to show minus 500 shares, and then it'll
Right.
show the green. And then you have to buy the cover, and then it becomes 500 shares, right? So it would just only, but it's instead it already covered for you.
Yeah.
So it's very strange. It
And it
covered
doesn't
for
make a
you.
difference to me either way because it's almost better that they cover it for me because, last time I got screwed, I had to pay a little bit of money because I waited. I didn't know.
Mhm.
So,
Yeah.
but now it's great. But either way, it's the same thing. It works out to be the same thing. It's just how
Hmm.
fast you're going to be able to pull the trigger.
Yeah. So now
So,
you got the
yeah,
shares. I think is gonna just it's nice and steady.
yeah.
Uh, and yeah, Com actually moves really slow, but it's a, it's it but it's an upward trajectory.
So I got 500 shares. What do you think? Should I sell a covered call
You
on
can
this?
sell a normal cover call. Actually, you can sell 10 because you have a leap and a you have shares and a leap, so total of 10. Now you can
Okay.
be more modest on the strike. You can probably go with a trading at 19. You can go with like a 21, but I don't think there's premiums there. Uh,
We'll start with
but you can
five and see what
see,
that looks like. 19.
yeah, it's trading at 19 though. It's only
Okay,
25.
there's
Well,
no
that's
premium
if you pick
there.
19, it's because you want to
Oh,
exit,
I gotta sell to open. Duh.
right?
Sold to
But
open call.
you'll pick if you pick a 19 strike, it's because you want to exit a 19, right? So,
Right.
but if
That's
you
not
look at
much
a
of a premium.
21 to see what it is, yeah, it's only $3, right? So that's why I remember Com has very low premium.
Right. That was, yeah,
But
we went through that
whatever. I mean,
before.
you live in Mexico, so if you do 10 contracts, it's $30. That still buys you a lobster.
Right.
Yeah. So
It's true.
yeah. So it's trading 18.98, 21. That's $2. You can even go 20.50. Sometimes I like to do $1.50, 19.50. No, 20.50. Yeah. There you go. So
Yeah, I
that's
think
what.
it's safe. I mean, it's only 1 week too, so we can always roll it.
Yeah. But no matter
It's
what,
just
even if you, well, again, I don't know if you're gonna get if you do this, it goes in the money. You get the shares or you get negative shares. I don't know what's
right.
interesting, what's going on right now.
Right.
We'll see.
What are you thinking on com? Have you looked at the technicals on com? Are you seeing any
Yeah, I looked a
opportunity?
long time ago. It's they're in the infrastructure industry, but it's a slow mover, which is good. I mean, but it's a has an upward trajectory, right? Now it's trading at around 19. It broke 19 just now. So, but it moves very slow. So if you pick a 2050 strike, it's okay.
Okay. Let's do that then. I just wish we could squeeze more premium, but I've noticed it hasn't had a
No,
lot of
that's
premium.
yeah, like not a lot of premiums there. Your upside is just holding on to it, the stock, and just letting it appreciate.
Right. And I wouldn't mind selling it for a little bit of a profit where it's at, but I think it's going to continue to rise, and I don't know.
Yeah,
I could make some money off
the
that.
mid is 7 now, so you're pretty far away.
Oh
Yeah,
wow.
yeah.
How's that change so fast?
I think it wasn't showing you correctly. Let's see. No, yeah, there's not even a bid. Now I think it's 0.05. Yeah, it's 5 now. $50. It may not get filled too because it's just the bid and the ask. I mean the mid and the ask. There's not even a
Right.
bid. That's why I would just leave it. You know what I mean? You don't really do anything there. There's no
Yeah,
premiums.
that's
Not
what I'm
enough volume.
thinking.
Yeah.
So 1700 is where we're at on the quantity on the hood. I
Yeah.
got this 130 or 125 strike price for the January 30th, which is beautiful. I mean, it's still looking good. Would you bring that back a bit?
Mm, I would go with 120.
120?
Yeah, I will go. I will be aggressive with hood with the strike prices for where it's
I was
trading
thinking
at.
the same thing.
And then yeah, and then I would tone down my aggressiveness once I get to the strike price that I want to get out for. And I've seen
Right,
that resistance now is at 135. So I don't think we'll ever get that 140, 150 unless something spectacular happens.
right. And we can always roll. So I want to keep the date the same, but it looks like I can make another $2,144.
Yep. If you roll down on the keep the same date.
And I'm still profitable even at 120. I mean, right now I'm up 10 grand. So
That's
I'd
right.
be up even more. So I'd be okay with taking profits and then do the wheel.
Yep. Yep.
Keep.
So just do aggressive wheel for where it's trading at
Yeah, I like
until you get
that.
to your
Okay.
exit strike.
So 2144, I'm just gonna copy that. Okay.